was on board until they weren't. Out of nowhere, there was a lot of Facebook opposition to the data center that was being built. And we traced exactly where this opposition was coming from. As it turned out, it was coming from an environmental activist who didn't even live in the city. She came from the city next door. And we looked into what she was doing in her background, and we realized that she had actually partnered with Greenpeace, which at the time, Greenpeace had received a huge infusion of cash from a rival cryptocurrency to Bitcoin. That the explicit purpose of this Greenpeace movement was to FUD or cast fear, uncertainty, and doubt on Bitcoin itself. And so from that experience, that's when I realized we need to follow the money. And in doing so, I was able to translate that follow the money ethos to this national project we're doing right now.
What continues to bother me is that it's very easy to feed into this natural fear of technology that many people have, this natural fear of change. And you see across crypto, across AI, like the people who should be supporting this technology the most are fighting it. And who am I talking about? I'm talking about the progressives. Like crypto on its face is the most democratizing approach to finance you could have. It gives people real-time access. And yes, there need to be client protections, but it's a very progressive technology. AI is absolutely leveling the playing field overnight when it comes to information and education. It's a huge opportunity for people who have not had access, who haven't had the opportunity for on-the-job training because they didn't know somebody. So this is very progressive technology. And so it's just crazy. Like when you see some of those progressive technologies coming on with this incredible progress, some of the progressives saying, no, we don't like this because it's dangerous. I think we've got that backwards.
Polymarket odds were at 75% in May, and now they're at a little under 40%. And they've come down kind of linearly, which just, speak to this. Every day that it's not done is a day wasted. The ethics question, it's hard for me to not think of that as a delicious political nugget that some people want to kind of wrap up and take home with them to eat another day, to point to the president's, personal interests in digital assets. And of course, the disclosure a couple of weeks ago, he's made well clear of $1 billion between himself and his family, is red meat for the Democrats. It's important that it gets done. I do think at this point, the reason that it would be a good support for the market is it would be a surprise. I do think the market would take it as a surprise that passage takes place. It's not going to be yep, thought so, no big deal, we expected this. I don't think it's priced in right now. And so surprise is one of the most powerful, emotions that can help fuel either up or down moves in prices. So passage would be a surprise, and I think it would be hard to imagine a market that doesn't experience some lift.
Well, I think for us, what's exciting to begin with is the traction and the early activities that we're seeing on the chain. I think it's great to see developer building, you see user engaging, and you see the chain performing very well, like what we were designing. So not only it's super fast, but also the gas are also pretty low. And so far we are seeing a ton of excitement from the customer about just that, and the fact that the chain is really working like we attended. We just launched super recently, so it's only 2 weeks ago that we announced some of these changes, and we're seeing the TVL actually increasing quite a bit. It's past 370 million. A lot of that is stablecoin because we are connecting directly the Robinhood app to the chain for our earn product, where you can get approximately 7% on your stablecoin. And I think that was kind of the main hero moment that we are trying to push on when we announce all these new products in London. And my hope is also that at some point we can reduce the amount of jurisdiction limitation. I think in the US, for example, we're waiting on this Clarity Act that we've been discussing. The SEC has also been vocal that they do believe that tokenization of securities will be helpful for the markets. I think in a lot of regions across the world, they could actually benefit from tokenization, because right now it's very hard to interact with some of these exchanges, and so liquidity is therefore limited. But in a world where you can access all these exchanges and all these assets across all the countries, you can actually largely increase the liquidity and therefore largely increase the economical benefits for the local region. So I think right now we are kind of at the beginning of the tokenization world, and I wouldn't be surprised if in a few years everything is tokenized and you can access any exchange 24/7 because the benefits kind of outgrew the old regulations that are in place.
So the president now has greater leverage over commissioners who are already serving. So if you have a commissioner who, the president thinks is blocking the administration's agenda, the president now has significantly more ability to replace that commissioner with someone who is more aligned with his administration's priorities. So what that means is agency policy, right? So everything from rulemaking and enforcement priorities to granting exemptive relief, that can can all become much more closely aligned with the White House. And these things could potentially change a lot more quickly from one administration to the next. So I think what you'll see happen is that presidential elections will now have like a much more immediate effect on crypto regulation and just like regulation in general, right? So instead of waiting years for agency leadership to gradually turn over when commissioners' terms expired, a new administration could come in, replace, all the commissioners, presumably, and start like reshaping regulatory policy from like very early on. So I think like that could potentially have like a really big impact on policy.
What changes the distance between having the information and being able to act on it, because like the more you understand agents and loops, the better you can get at making it work for you. And this was not just like one fighter here and there using a trap bot. They have decided to devote significant resources to build an industrial operation where they have specialist AI units, some of them who just sit in vehicles near the front trying to figure out how to make the next move. So they are doing AI governance in a way that like a lot of startups should be doing, but in a horrible, like the worst possible way. And they're learning how to do all this through jihadist networks. So like terrorists can talk to each other and share information, and they were trained by other terrorists, right? So you may have heard that LLMs have these safeguards, right? Like if you ask about a weapon, it will say, no, I can't answer that. Those are super easy to get around.
There's a concept in like complex systems, like a norm is now place thing. I'm just gonna prop the door open overnight just to like make sure that place thing. I'm just gonna prop the door open overnight just to like make sure that the mouse doesn't get in or whatever the hell the problem is, or like there's birds in there.
Long story short, market tanked. We started a winter, which is not great. So we postponed the ICO and we did it now recently. And in the end, that 5% value is no longer worth 11, 12 million. We were able to raise around $4 million. So $4 million was our new budget. Now we have a new budget, is much less than the original. And we debated a lot what to do. Do we give tokens? Definitely not in the plans, because then we go to zero. And then what's the point of doing this at all, right? You need to take care of your stakeholders. And so we decided to stick to our 5% budget. And we debated it with our investors, with our users. And we decided that instead of giving some people maybe 1 or 2% reward, whereas some people were losing 90, 100% on the YTs, we said, let's just make everybody whole. So at least nobody lost any money. And so the people that really were losing were the YT guys, and we made them whole. And then everybody else, they didn't make any money, but they didn't lose any money.
Heads up, everyone. We've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again. Before we dive back in, a quick word about something we make ourselves. If you like the way we cover crypto on this show, clear-eyed, no shilling, just what actually matters, you'll like the Unchained Daily. It's our free newsletter that lands in your inbox every weekday, with the most important stories in crypto written by journalists, not marketers. No jargon, no hype, no number go up cheerleading. Just the news you need to stay ahead in the time it takes to drink your coffee. Subscribe for free at unchainedcrypto.com/newsletters. If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every for people with fresh perspectives from different backgrounds, whether it's tech, UX, or product design, whether you're crypto savvy or crypto curious, as long as you have the passion to make a real impact at a company striving to make finance accessible to all. Explore crypto careers at Fidelity today and make the decision that could change your future for the better. Visit crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
And I actually saw this play out in a job that I had before I went to the Treasury Department. I worked at Riot Platforms. Some of your audience may know Riot. It's a Bitcoin mining and AI HPC company. When I was at Riot a few years ago, we were building a data center in Corsicana, Texas. Everything was going swimmingly. It seemed like the community was on board until they weren't. Out of nowhere, there was a lot of Facebook opposition to the data center that was being built. And we traced exactly where this opposition was coming from.
Hey everyone, welcome to Bits and Bips, where we explore how crypto and macro collide one basis point at a time. We're here to discuss the latest stories in the worlds of crypto and macro. And as a quick market snapshot of the day, Bitcoin's around 65K as I'm reading this, ETH around 1890, Sol around 77.5, Hype is back to 62, WTI is at 83, Brent's at 89, SpaceX at 120, Circle at 65.5. However, before we begin, a quick commercial break.
This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained. Heads up, everyone. We've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained. No more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right, everybody, welcome back. As always, I'm your host, Austin Campbell, High Scholar of Zero Knowledge Group. I'm here with my usual two co-hosts, Ram Alawalia, Maester of Wealth, leader of Lumina, and Chris Perkins, the golden hand of Franklin Crypto. But today, we have a very special guest for our opening segment, Alex Wilson, founder of Cyclops, previously head of crypto at payments giant Shift4, co-founder of the Giving Block. And before we begin, a quick reminder that Bits and Bips has its own channels now, separate from Unchained. If you're not subscribed here, you're going to stop seeing these episodes. So if you hate us, stay off. But otherwise, don't lose your regular dose of the sharpest takes in crypto. So you can subscribe on X, YouTube, Spotify, Apple Podcasts, or wherever you're watching. So every show keeps showing up in your feed. Now, today, we're going to talk about stablecoins first. But Alex, as somebody who's been an operator in the space and a guest on the show, can you give us a little background as to what you've done and orient our listeners as to why you're here?
Yeah. Thanks for having me on, guys. And Austin, your intro was a good starting point. So this is actually my second stab at things, starting Cyclops. Back in 2018, started the Giving Block, where we help charities accept crypto and stablecoin donations. And you can imagine in 2018, telling charities to pay attention to crypto wasn't that easy. But we stuck with it, and we ended up working with most of the biggest charities and had really dominant 80-90% market share. That business really took off, and we sold it to Shift4 about 4 years ago. When Shift4 acquired us, that was really their first foray into crypto and stablecoins, and I became the head of crypto and stablecoins there. We stuck around for 4 years, which is actually, I think, longer than we probably would have expected to, because we really were learning a lot and really enjoyed it there. And so we built these different products for stablecoin settlement, for pay-ins and payouts, for the hundreds of thousands of merchants at Shift4. And then just about a year ago, we started Cyclops because we were pretty unhappy with all the solutions in the market. And we really wanted to build a company that was purpose-built for the payment space. So that's a quick overview.
Awesome. Thank you. So then let's start with some news in stablecoins payment space. And let's just lead with the big one. So Stripe and Advent have launched a bid for PayPal. where essentially they valued PayPal at about 53 billion. I think that's about a 28% premium over the close at the time, though PayPal has traded up from there. And this is Stripe's second run at PayPal, really the first serious one here. PayPal's board, as boards always do in these things, says the offer is inadequate and undervalues PayPal. You will never once, as a listener, hear a board be like, honestly, that's too much money. You have overvalued us. This is always what they say. And where we are is looking at this from the perspective really of distribution. PayPal has 400 million plus active accounts. Branded checkout is just a cash cow for them. It processed 1.8 trillion in 2025. If you bolt that onto Stripe's merchant network, they have a much more two-sided platform. So it's not a surprise this bid came out. At the same time this is going on, Visa is launching support for the Visa stablecoin platform, OpenUSD, support for USDC and USDG. That allegedly is going to reach 200 million merchants and 15,000 FIs. Visa settles 15 trillion annually. So let me start with the PayPal and Stripe dance. What do we make of that? What do we think of what Stripe is doing here and what this says about where the payment space is going as stablecoins put pressure on it?
On my side, I think it's funny because I think the last time, Ram, we talked and I was on your other show, we were talking about private versus public valuations.
Exactly.
And that's, of course, a big driver of this. So I think Stripe is taking advantage of their private valuation being a lot stronger than the multiples we're seeing in the public markets. And ultimately, it's a good idea. Ram can probably talk more numbers on why it's a good idea from a valuation perspective and things like that. But I do think it makes sense, right? For as long as they can have such a premium in the private markets, they might as well buy up payments companies that are trading at, historically very cheap valuations right now.
Yeah, I think you got it exactly right. The funny thing is normally you see liquid public markets firms using their currency to acquire private companies, which is exactly what happened with you in the Shift4 acquisition. But now you're seeing the reverse because VCs are trying to avoid mark-to-market. They can enjoy the management from that. And Stripe has maintained an elevation on its valuation despite public markets firms in the payments category correcting. So they're taking that private markets kind of funny money currency and using that to drive acquisitions of real businesses that have lots of free cash flow. I agree. It's a smart move on Stripe's part.
So from the integration perspective, what have we seen over and over again in stablecoins? It's in any business, frankly, distribution's king. And Austin, how are you thinking about the integration with Tempo, with the potential distribution the distribution potentials with PayPal? PYUSD never really got off the ground and really never had that material product market fit. I always wondered why. They came to the table with distribution, and I think, I don't know, maybe some of their public compliance held them back. Maybe they moved a little bit slower than others. But I guess, why didn't that distribution work for them, and how's it going to work for Tempo?
So I think the first part, I'll start with some thoughts on PayPal, because this also relates to how they got here and why they're being targeted at this valuation. I think PYUSD has been a failure from a distribution perspective because PayPal didn't choose to make it succeed, right? And what I mean by that is you have a platform where you're holding an immense amount of user funds. You have them on your legacy ledger. And you could have, had you embraced stablecoins, had the second or third largest stablecoin overnight by actually embracing them, and they refused to do so. The other interesting part is until recently, which is when you started to see some degree of growth in PYUSD, they were only offering it to the people who least needed PYUSD, which was in the United States and at relatively small values. So not really usable for institutional trading. You could mint thousands to tens of thousands, which if you're, Cumberland or Wintermute, and you need hundreds of millions to crypto trade, what are you going to do? Wait a year to ramp that up at those limits? So I think PayPal very much did the classic call it early innovation thing of quote unquote taking the newspaper and putting it on the internet, by which they literally took their current product framework and put it on a blockchain. And that doesn't work on a blockchain. The blockchain demands are different. The needs are different. The customer types are different. The market opportunities are different. Like, Alex, I'll throw that over to you after I finish what I'm saying here. But I think what happened is PayPal chose to fail, as weird as that sounds, by just not evolving or iterating and kind of putting the old thing up there in the way that they were used to, Chris. Like, that was not really innovation in the meaningful sense. And that, I think, is the missed opportunity. I do know there were voices at PayPal who wanted to do significantly more. I don't know if it was the CEO. I don't know if it was the board. I don't know if it was risk and compliance, but clearly they could not get over the hurdle to actually do those things. And so when I look at this from Stripe's perspective, given that they've already integrated Bridge and they're starting to work on stuff out in the wild, I wonder if they're seeing the exact same thing I'm saying, like here, and being like, well, we'll just do that.
Yeah, I mean, it's interesting you say that, because it's exactly what we see at a lot of these other big payments companies we're working with, where they often get so frustrated, I think, these crypto teams internally, that they can't get much done. And so they'll take sort of whatever they can get. And often that's something that's really easy for the leadership to wrap their head around when they're not super crypto or stablecoin native. So they look for something really simple, but you're kind of set up for failure from the beginning. And for us, like, the biggest opportunities are much more B2B, like large transaction value, rather than, like you're saying, these small sort of consumer amounts. But so often we hear from them like, oh, we want to start with something really simple, like a pay with crypto feature at checkout, even if we tell them, like, it's kind of a novelty. That's not where you're going to really see the traction and the benefit of adopting stablecoins. But so many of them want to start there anyway. And then you're kind of stuck, right? Because then there's not great traction and they don't want to do anything else.
When you have a legacy business model, it's oftentimes very difficult to adapt it and move into a new space that's very uncomfortable for you. I think part of the challenge with PYUSD is its lack of, like, international accessibility and DeFi accessibility. And I think some of that was probably driven by some of the lawyers and the compliance folks who said, you know what, we got to protect the mothership, guys. Like, we can't take this kind of risk and bring this kind of scrutiny. And that was the last, cycle. I feel like things are different now. And I feel like it's different now because I'm seeing companies be much more aggressive in saying, no. Like, we have risk if we're not in this space, which is a lot different. It could have been a timing issue as well. And of course, execution.
So part of, what's the right way to say that? I do think there was a timing issue. I do think there was an execution issue. I think you've identified both of those correctly. But I think Alex is right that there's an element of the innovator's dilemma here, right? That is to say, if we do these things, we risk disrupting our own business, so our teams don't want to do it. So we instead take the things we can get, and instead you just sit there while other people disrupt your business. And by the way, if you don't think that's happening to PayPal, go look at their stock price from like the early 2020s to present. And so you end up in this world where by not doing it yourself, you let other people do it for you. I may have said at a couple of meetings at previous stops I was at, we should either do the whole thing or not do this at all. Like, actually, the worst thing to do is the half-ass thing, because then we're going to get stuck, right? Like, either truly transform yourself with stable coins or actually skate away from them as far as you can. Now, Alex, you mentioned the B2B angle where it might be easier to get traction there, and you've been in the payment space significantly. How would you view a combined Stripe plus PayPal from a B2B and like business side angle of that platform?
Yeah. Well, I think first of all, like Stripe, out of all the payments companies, doing the best job when it comes to crypto and stablecoins, right? That's pretty obvious, I think, for all of us. I don't know how much of the PayPal stablecoin and crypto business they would even necessarily want to keep, right? I think they would stick to the newer things they've done with Bridge and Privy and the other acquisitions. And they would just refocus the priorities probably more around things like stablecoin settlement rather than some of, let's say, the consumer checkout products, at least when it comes to stablecoins. For the broader business, I mean, I think it's just more merchants that they can sell these stablecoins, products, and rails to.
Ram, how would you look? All right, so say you're a PayPal shareholder right now. You've got Stripe coming. I agree to some extent with the public-private stock divergence, but I think it's also pretty clear that Stripe cannot buy PayPal with stock. Like, how would you look at this from a market's perspective? If you're like voting on a merger, what is going to move you one way or another?
Number one consideration is price. At a certain price, there's a willing buyer and there's a willing seller. PayPal has free cash flow. That is attractive, and Stripe needs to show growth in free cash. PayPal's free cash flow yield is around 11%. As an aside, I'm not sure why you'd want to own sovereign debt when you find assets like this yielding 11%. And that's true for a lot of payments companies, by the way, that are on sale. So, Stripe can take PayPal's earnings, which are fetching a low multiple at 10.5 times, and Stripe can apply its higher multiple and cause a re-rate in their future stock price just by wrapping that earning stream. So it makes sense for Stripe. I think PayPal is just playing a bit hard to get. They've had a lot of headaches around this thing. Like a board member stepped in the CEO role. Payments and the payments competition is intensifying. It's an incredibly difficult category. I think they're holding out for a reasonable price, but there's a transaction to get done at the right price.
Okay, so I want to move slightly on, let's call it, from just specifically talking about the PayPal angle here and think about the distribution battleground in general. Open Standard is coming. Mizuho has cut Circle to underperform with all of the competition. JCB, Japan's largest card network, signed an MOU with Circle. Other places have started to build on this. Pix has, of course, integrated a few things. And what I want to ask here is, as we're looking at the landscape right now, as we see the PayPal Stripe dance, as we see Visa MasterCard, as we think about what banks are going to do, Alex, I want to start with you because you've had a viewpoint here. What do you see as the emerging winners and losers the more this dance goes on?
It's Circle stands to lose the most, really, right? But whether it's OUSD or some of these other consortiums or newer ones that aren't even out yet, it's really hard to know which one's going to be the winner or even a serious competitor. It's still just so early for OUSD and a lot of these other sort of bank-led consortiums, which do a lot of innovation theater, I would say, right? They have a fancy announcement, a lot of names, and then you really don't know for 6 months, 12 months, what's going to actually happen. But I do think at least the group they've assembled for OUSD is certainly threatening to Circle and certainly interesting, but it's going to be hard still. Circle's still got a lot of market share and they're pretty deep in a lot of these relationships. It's not going to be easy to disrupt them. They might have some new competition with OUSD, but I don't think it's so certain that they're really going to get disrupted very quickly.
What about your alma mater, Austin? USDG, didn't mention that.
So I think USDG is going to be a fascinating test case of what happens if you show up with your own installed user base in the first place, right? Because Circle, as we know, is not really deeply retail facing. They use Coinbase for that. And that's been a majority of their distribution. But USDG just showed up with a small company that has a handful of users called Robinhood attached to it. And I think that is a game we have not seen played in the stablecoin space before, right? Which is to say a company coming with a large user base and pushing stablecoins to those users. Essentially, Robinhood appears to be doing what PayPal probably should have done, which is just take every single user they can get their hands on and offer them USDG at certain terms. Now, they also, of course, Chris, this is more complicated. They launched their own blockchain. They have integrations with a lot of the major DeFi people like the Uniswaps of the world building on there. They have a whole earn product, right, where they're giving call it promotional 7% yield right now. So they've got a whole ecosystem push behind this to try to solve that Circle problem of what do you do with the thing? And the answer is, well, they brought you the whole meal. So I think that's a business model we haven't seen it's a reason why I'm actually optimistic about some of these broker dealers getting in, where if they really choose to do it, they have the product, they have the architecture off the shelf. Another good example, we haven't seen exactly where they're going yet, would be Fidelity with their stablecoin.
Yeah, I think the USDG story is fascinating. If you want to come to my arcade, you got to use my token. The question that I want to see is, can I use that token at everyone else's arcade as well? And we'll see. Very familiar. This is a little bit different than the payments use case that we were talking about earlier. These worlds blend, but for the big exchanges, the big clearinghouses, stablecoins are now your net interest income, which is a core part of your business model. And I think everyone's looking at a stablecoin as, hey, that's my net interest income. And it's just a fascinating place to be. Now, does USDG transcend itself into a payments stablecoin? Will you see a difference between net interest income, collateral on my exchange, float, whatever, versus payments use cases? The same asset, really. They're at some point they'll be genius compliant. You can use them for everything. I personally think you're going to see massive consolidation. Anytime you have regulated industries, you will see consolidation because the take's going to get squeezed more and more and more, and then it's just about scale and size. Don't know who those 2 or 3 are going to be. Don't know if it's going to be regionalized. Yes, I think there's going to be certain cases where if you come into my arcade, you got to use my token, and people want to come to the arcade. I don't know. We're at the beginning of the story, fellas.
Alex, who do you think has got a better shot? JP Morgan with their stablecoin, or a Tempo offering from Stripe, or like a niche specialized stablecoin provider?
It's a good question. I mean, out of all the ones out there, I would think something like an OUSD has the best chance of at least appearing more neutral than a lot of the other ones. I think it's going to depend on how the governance really works for something like OUSD. But I don't know. We've seen a lot of these bank related ones for a long time now, and they've never really gone anywhere, and they haven't really played nice with the outside world. So if they are willing to go in the direction of being more like a public blockchain and have some better interoperability, then maybe they have a chance. But until then, I'm pretty skeptical of the bank led ones.
And what's your view on Stripe and where it stands today? They've got a blockchain play. They're doing more M&A. They were priced really richly in 2021. What's your overall assessment on where Stripe is? Do they have more to lose, more to gain from where they are today?
Yeah, I think they're just a different stage than they were, right? They're just a more mature business than they were a few years ago. So that's why they're looking at new areas of growth, I think, right? Whether it's M&A, going deeper into stablecoins and crypto. But I mean, I can really just speak to their crypto and stablecoin plans. Like, they're doing the best job by far out of any payments company. They're the only ones who I think are taking a shot at really trying to disrupt themselves before someone else disrupts them. And you got to give them credit for that. But I think they see where things are heading, and good for them for really making some serious bets there.
That's the right answer to get an acquisition offer, sir. Acquisition offer from Stripe. So congrats there. I think
that's all right. They're gonna have to wait a few more years before we're open to that.
So I'll close out. Alex, I know you need to step off here, but we appreciate you taking the time. And everybody listening, please pay attention to what Alex just said. Disrupt yourself before others do it to you. Like, this is the key to getting out of the innovator's dilemma. Spoken by somebody who's done this once already and is now doing it again. So, Alex, thank you for joining us here. For everybody else, we're going to take a quick commercial break and we'll be right back.
Appreciate it, guys.
If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months. Heads up everyone, we've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right, everybody, welcome back. Let's talk about stocks. So there has been record U.S. equity issuance, which is often a late cycle tell. And the SpaceX IPO, is that the round trip poster child? It's already back below its 135 IPO price. It's trading slightly under 120 the last time I checked before this show, meaning about 1 trillion of market value is gone from the peak where it had traded up significantly right in the first days after the IPO. What's going on underneath here? The AI capex boom is soaking up cash that companies would otherwise use to buy back their own stock. And we've been seeing, call it a structural drag on US equities as a result of this. So 2026 Q2 was a record quarter for US equity issuance from Goldman. The Wall Street Journal framed this as running near the 2021 peak. It's one of the highest levels on record. The last comparable extremes were 21 and then 2000. So SpaceX did the round trip that we just talked about. Securitize had originally jumped and now has fallen down from there as well. So, Ram, I want to start with you on this. We're seeing record issuance. We're seeing buybacks being crowded out. Are we seeing late cycle top signals here? What is going on?
This isn't late cycle top signal. This is what happens after you have a couple events, one of which you pointed out which was a SpaceX IPO, but you had other events that were taking place also. The bicentennial is one of these mini euphoric moments. People get really excited and then they get less excited afterwards. Same thing happened after Trump's inauguration. If you remember, he was talking about nuclear, space, rockets to the moon. You had this little mini euphoria and then some weakness after. You also had Kevin Warsh, which had his first press conference, and he led with the more hawkish tone, which he has to instill credibility. So you had a lot of things going on at the same time. And the other, which really popped the bubble, was Micron earnings. Like one day after Micron's earnings, you started to see deflation in the semiconductor category, which had an extraordinary momentum run up. On the issuance, it's not excessive yet. Like the pace of issuance is still considerably less than what we saw in 2021 with all the SPACs and the IPOs. You still have reasonable deal underwriting. Like I'm not going to go buy SpaceX stock. It is overvalued. It's still low float though, so it hasn't unlocked onto the market yet. So that can't be the driver. I think it's all of these events together. And then of course you've got the post-July seasonality that's showing up now. You are seeing rallies in quality stocks like ICE, which I own, in Broadridge, which I just bought today. Insurance companies are making a comeback. So it's really a weakness in these year-to-date high momentum categories, which sucked up so much capital and attention. And now that's released and flowing into other categories. I saw an article in the Wall Street Journal today about this 19-year-old kid who said he sold Microsoft and NVIDIA and he wanted to buy quote unquote aggressive, quote unquote high growth stocks, names like in quantum and space. Like that's what's happening. That kid's probably not making the best decision now. I expect we're going to see dramatic cloud business growth from Google and Microsoft and Amazon. They've been left out in the cold. I expect their CapEx decisions are in fact productive, and there are opportunities in the quality parts of the market.
Another interesting one I've seen on that angle has been the recent performance of Apple. Right, Ram is one of the companies that essentially did not burn a bunch of cash on AI and instead can just, continue buying back stock. They seem to have let everybody turn right and continue like going down that road and just continued on the path they were staying on. What do you make of that?
You're correct. I would say this, Apple's navigated it quite well. I mean, Tim Cook, he was handed the wheel and his job was not to mess it up. He bought back stock, had good capital allocation. He actually cut CapEx by scrapping Apple Car. He didn't blow a lot of capital on building the super AI Avengers team like Meta. Didn't spend a bunch of money on data centers. They did a deal with Google Gemini around how to reinvigorate Apple Siri product. So they did it in a capital efficient way. It's very, very thoughtful approach. I would say this on Apple is that it's now at a 35 times forward P. The last time we saw this was in August 2020. It's rarely been this pricey now. I doubt there's much upside left in Apple from where we stand.
We've seen the same theme in the crypto space for a very long time. How often have you seen TGEs or even IPOs with the crypto companies that we've seen of late spike on the narrative and then ultimately come down materially? I think investors are starting to realize that the narrative works until it doesn't. And I think you're seeing some just cyclical factors now where you believe and you believe and you believe, and then all of a sudden it's like, okay, that press release was amazing. I love the storyline, but let's get down to brass tacks. Ultimately, investors need to focus on fundamentals, and that's what will prevail longer term. Look, the economy is doing pretty good right now. We saw much softer CPI last week, softer PPI. Despite the fact that it looks like the war is starting to heat up again, oil hasn't gone to 200 overnight. It feels like we're fine. The war is the war. You can have uncertainty up or down, but it seems like that uncertainty level is like the markets are getting used to this war. And so it feels very constructive. I know I've said that for a while now, because again, between macro and some of the fundamental projects that we're seeing across our space, stay focused on fundamentals, not narrative. And that's the play.
So I guess as a final point on this one, what I'm trying to keep an eye on is, Ram, your point on valuations like Apple. Usually when valuations are this high at a forward basis, things don't look great in the United States, but we'll see where it goes. I'm not 100% certain that's the end state here. So time will tell. But speaking of things that have been disruptive for markets, let's talk a little bit about AI. So Beijing's Moonshot dropped Kimi K3, an open weight coding model, and we saw AI and chip stocks sold off across Asia and the US. Excuse me. The real drama. Okay. This is the second case of cheap open weight Chinese models pressuring the US labs moats. We all remember DeepSeek. Questioning the scarcity thesis, given all the hundreds of billions of AI capex. Is there going to be a rotation out of mega cap AI? And there are nation state level concerns here. On one level, there are a lot of contested points around this, right? The benchmarking story, allegedly they topped Anthropic and OpenAI on one leaderboard, but also K3 lands behind on many general tests. Did they optimize it for a specific test or specific benchmark? So we'll have to find out. Full public release for the model's weights are set for July 27. Anyone can download it. Anyone can run it. And we'll see what happens there. There's also a debate around moat and compute. So Chinese labs have figured out, with equally great talents and cheaper access to usage data, they've been able to make similarly powerful models. I'm expecting a lot of competition from this playbook from Huijia Yin. Apologies if I've butchered that. And then Peter Fenton was saying cheaper open models are bullish for the infrastructure layer. It's almost a thermonuclear battle to provide the compute. On the other hand, Gavin Baker, via CoinDesk, K3 may be an important inflection point, potentially negative for Anthropic and OpenAI, while being net positive for essentially every other company in the world. So, Chris, we saw this with DeepSeek, and CapEx and markets kept climbing. We also know the level of nation state concerns here has been rising exponentially as models have improved in quality. What are you making of what's going on here?
First, been kind of blown away by the acceleration of innovation and the outputs that we're seeing. Every time there's a new model release, it's for a while they're just leapfrogging each other. But when you step back and see where these models and their outputs were a year ago, a year and a half ago, the pace and acceleration, we're in the middle of an arms race. In certain ways, that's really, I mean, the technology is improving very, very fast. As a free markets person, you like to see competition. Of course, to the extent state actors are involved, sometimes it's always not clean competition. Um, I think it's just fascinating how the Chinese have gone open source, which is not normally their tact. And they're doing so because they have to. And the fact that they're able to create innovation in an environment where they don't have the compute tends to result in outputs that are highly optimized for what they're good at. And so I think there's a lot to learn. Look, and I think America across corporations, they're grappling. They're like, damn it, these token costs are so expensive. I mean, I'm seeing that in real time across the companies I deal with. It's unsustainable. And so to the extent that this puts pressure to optimize, like this is not a usable technology if it blows through your tech budgets. We're already seeing rationing in many places because of the expenses here. So hopefully in time, these expenses go down, the utility goes up, the deflationary impacts in the economy are realized. Very interesting, volatile moment. And I can't wait to see how this plays out. Ram, what are your thoughts, bro?
I agree with nodding my head all the way through. It is a war with China for the next technology that is transformational. And China is playing warfare by offering these low-cost models like this model, a 2.8 trillion parameter model, 1 million token context window, which rivals Google Gemini, and it's priced at 100th of what OpenAI is. So it is significantly negative for the equity of OpenAI Anthropic. There's a cloud business directly indexed to OpenAI. It's called Oracle. Oracle's got a big contract backlog where they face off with OpenAI, and their stock price dropped 4% today. It's plumbing new lows as we speak, down 50% in the year. So it's not going to lower demand for semiconductors, though. We still need semiconductors, but it is creating credit risk if you face off with OpenAI, who signed up $1 trillion in these revenue obligations. That's why Oracle is feeling the pain here. There was a bit of an own goal here. The founder of that company is a Carnegie Mellon University graduate. So, we lost this amazing talent to a geopolitical competitor, which is unfortunate. But I do agree with Gavin Baker's take. The cost of intelligence is dropping. That's a good thing. We need more intelligence. My wife would be the first to tell you that. We need it in our household, everywhere, with the real world. The next mission with AI is going beyond intelligence and touching workflows. So overall, it's a great development for humanity, but there are local costs at these frontier labs that are going to face the brunt of greater competition.
So let me go to something that I have been observing here and sort of provoke a few more questions out of this, hopefully. If it is true that open weight models are going to become highly performant and we can run them locally, what does that ultimately say about where the value capture in AI is? From an investment thesis perspective, where are the companies that created value, not just for the world, because I think all of us agree that AI models have created value for the world, but like capturable long-term value for themselves?
I'll throw an idea out there. Like, everyone knows semis are a direct beneficiary of CapEx spend. That's that kind of CapEx receiver thesis. But they've re-rated, they're fully priced, now they're coming back down to earth. I believe the next leg will be the AI beneficiaries leg, companies that can demonstrate strong productivity growth through the use of AI. Within that, financial services stand to benefit, and healthcare. There's so many use cases in financial services. We're going to see an AI native bank that's built front to back, from customer acquisition to customer servicing to underwriting to loan documentation, execution. That's going to happen. That company doesn't exist. And you're going to see that in healthcare around diagnostics and sharing of information, proactive guidance to the patient. We haven't seen that take hold yet. The ChatGPT moment was in Q4 2022, and we've still mostly been in the picks and shovels, a part of the investment thesis, as opposed to AI beneficiaries.
So in crypto speak, you're talking about the app layer.
Yes.
Right. That is the value accrual. In crypto land, we had the fat protocol thesis where does value accrue to these blockchains? It's kind of like, it rhymes here. And I agree, Ram. The value ultimately accrues to the app layer. And I think you're going to see some interesting differentiation on top. And it's not going to be dissimilar to quantum. Ultimately, you're going to have these massive, expensive, potentially state-controlled quantum stacks. And guess what? Apps and they'll probably be highly controlled by sovereigns who eventually launch them. And again, it's going to be the apps that end up driving that value. So it's kind of a similar thesis when you look at apps on blockchains, apps on AI stacks, ultimately apps on quantum stacks.
So I think one interesting point about the AI adoption thing is I wonder how much of this is going to start happening because they will be pulled along by consumers. And I say that specifically, Ram, because you raised healthcare. I know tons of people who are now taking things their doctors say to them or like conditions that they have and putting it into AI and trying to get a first cut, not just from the perspective of like, hey, AI, diagnose me. But before I go to a doctor, I want to understand more of what's going on here and have a vastly more informed conversation with the doctor than I would otherwise have. I think there has also been a lot of testing of doctors' claims in ways that maybe were not there in the past. And, essentially my doctor thinks this, but let me put it into AI. Let me shop for a second doctor if I don't like it or don't think they're right. So I'm wondering, and I don't have an answer to this, if that behavior is already observable in the healthcare space or if we're too early in the AI adoption curve to really see the impact here. But to me, there is a possibility industries will be forced to start adopting things because part of what I'm seeing in healthcare in particular, and like, I, as you can tell from my hair, was a mathematician by training originally. And so if nobody was paying attention during the World Cup, apparently Anthropic's Claude Fable 5 solved the Jacobian conjecture, which is, for non-mathematicians, I'm going to make this real simple. It's a roughly 90-year-old problem in algebraic geometry. It was proposed by Keller, and it basically was talking about how spaces behave. And what Claude was able to do was provide a counterexample to the conjecture. Like it actually came up with a specific, knowable, computable counterexample to the conjecture, saying this cannot possibly be true in general because here I found a specific time where it's not true. And that is a huge result. This is one of the 25 most important problems hanging out there unsolved in mathematics right now. How long until we're seeing that with the quality of these models with regard to like healthcare? Ram, good example. If I got cancer right now, I'm probably going to try to get it sequenced to go slam it into one of these things and be like, okay, what do I do about this?
Right.
Like we may already be very close. And so I guess I'm asking the question of what is the pull function to increase the rate of adoption here?
Well, a doctor's using AI now for diagnostics. Doctors can get the skill level of like House now, right? So it has powerful diagnostics capabilities. So I think that's there, but we still have so much more to go. Like the promise is still ahead of reality. Even now with the latest models, there's still opportunities for these models to improve. And the Jacobian conjecture, it's a great accomplishment for math, but what real world impact does it have? Real world impact is we found a way to target this cancer, or here's a way you design a fusion reactor that produces net energy. Or here's a way you keep your telomeres, longer for aging longevity. We still haven't seen that kind of impact, which is actually what matters in the world.
I mean, have we not found some of those impacts? Now I'm shooting from the hip here, But haven't we had various results in like healthcare already
Yeah.
found by AI? Like
There's some
We've had
novels.
incredible protein folding. Great.
What's the consequence? So we've had novel stories. The guy with Australia and his dog. There's another guy who diagnosed something with his daughter. Like there's some novel stories that are emerging, and they have some nice local impacts. But we still have more to do.
Always tons more to do, but I think the acceleration is profound. I mean, across the board, every single discipline is being impacted.
I also wonder how much of that, what is the right way to say this, is adoption based. Like doctors, I'm not trying to insult you guys. I have a lot of doctors and nurses in my family, but doctors are old. And so I'm wondering how much of this is just an adoption question, because I do think some of these impacts are large, to like the AlphaFold thing, which is what Chris is talking about. Ram, for you, what it does is allows faster, cheap molecule design, novel proteins, and specific like custom therapies for various diseases and mutations. So the impact is real. The problem is we've got to do all the studies or get emergency authorization to use these things. It seems like it's more the bureaucracy holding that up.
I think the adoption is self-financing, because if you're using AI, you have an unnatural competitive advantage. For example, Eli Lilly is using AI and they're driving results. I know we're using AI in a lot of what we do. That drives productivity. So if you are using AI, you're going to grow and take market share. And if you're not using AI, you're going to get competed out. So that's going to force adoption.
It's also evident on the battlefield. Just ask Dario.
Yeah. And I mean, not just there. As I've been observing this, right, like the battlefield iteration, as we start looking at the nature of warfare, if you look at what's going on with the front lines with Ukraine pushing Russia back, largely using almost entirely a drone-based strategy, some of which are human piloted, some of which are probably AI like piloted, even if only over short frames right now. I think we're seeing more and more of that iteration. Like today, all right, it's a cartoon, so let's not get overexcited here. But did either of you guys see the Anduril ad that dropped on X today?
Not yet.
All right. So we've got self-flying like helicopter drones that are now engaging in like both target interception and like disabling anti-air defenses to protect like manned US military craft. These things I think are coming pretty rapidly as people adopt. So I'm going to bring this all the way back to where we started. And Chris, this one's for you to start.
Oh, God.
If you're looking at what's going on in the frontier model space, and you've seen the special pleading from OpenAI and Anthropic to like restrict these things and keep them out of people's hands, but then China just drops an open weight model that will do it all. How are you thinking about this from a national security perspective?
It's tricky. We're in a national race. Ram said it beautifully earlier. We have to be a leader in this technology, full stop. And we also have to build in the controls and at the end of the day, your technology reflects your ideals, and we need to make sure that it powers our ideals and isn't used to change our ideals or go in the opposite direction of our ideals. So look, we have to accelerate. We have to be able to outperform our adversaries on the battlefield. There's a massive race going on. Talk to anyone in the defense space. And again, it's not only just AI. I think crypto has important national security aspects, and there's also an arms race going on the quantum side. Why? Because AI is accelerating all this stuff. So you got to own it. How do you defend it? I don't know. Like Ukraine is a big laboratory. Everybody knows that. Lessons are being learned every day, and it's a very, very dangerous world. But we have to really accelerate these technologies to understand them and to win.
Ram, what do you think?
Yeah, no, I agree. I think you just need policies to embrace and advance AI. There was a post by, I think, one of the members of the All In podcast who works for the admin is highlighting the regulatory constraints on AI adoption. He's a part of the administration. So, you have to have the right policy in place to, accelerate adoption. China is very serious about this opportunity. Like, the United States has the edge on capabilities, but there's a lot to do. And as we discussed earlier, like the promise is significant. The potential for human impact is significant and positive.
In finance, we found that predictable, regulated markets attract a lot more liquidity because there's controls, there's a common set of rules, and that's where we found the most success in finance. In AI, there's a lot of concerns about sharing your information with some of these Chinese models. If they, is regulation going to be important? Yes, the right type of principle-based regulation will be, because if you have models ultimately that you can't trust or hallucinate, or you can't trust your data, I do think a thoughtfully regulated, principles-based industry wins. That based on my lessons in finance, but it's a different industry. Maybe I'm wrong.
So I'll give a point here on how this is so complicated. Pulling up some quotes from David Sachs right now on Twitter. One, Kimmy K3 just fixed 15 critical security bugs that Codex and Fable refused because of, quote, cyber guardrails. There's no reason to limit American models on tasks that Chinese models handle without issue. We're only making ourselves less competitive. Following tweet. Here's another example. Hugging Face tried to use American frontier models to analyze an AI-powered cyber attack, but the guardrails blocked requests containing real exploit payloads, so they switched to GLM 5.2 running locally. The guardrails actually impaired defensive security. And I think this gets to the point that both of you are raising, which is there's no way out of this race. It's going. You could choose not to run, but that doesn't mean the race isn't happening. The race is still happening. You just chose not to be involved.
Yep.
All right. So to get to our final topic, where people also may or may not be choosing to not be involved, the Clarity Act. So Chris,
all right,
you and I have both been hearing things about Clarity today. I think let's start with the framing. Senate is on the clock. They go into recess first week of August. They need to get things moving if they want to get anything done. Once people get back from recess, I'm skeptical anything happens because of timing, must-pass bills, and the fact that a lot of them are going to be campaigning. So it's hard to get the votes. I think we agree this is the critical window. Yeah. So I'll ask you, where do you see the bill right now?
I think we're going to get one shot on goal. And what I'm hoping to see is a vote. Hearing prediction markets are pretty much given up at this point. I think they're in the 30s at this point, maybe even dropped closer to 30. They've given up, but I don't know. I feel like there may be a comeback on the horizon. I remain hopeful because it's the right thing for the country. And a lot of these politicians will, things get weird towards the end. We all know that. And I hope in the end, even Senator Warner, who's a Democrat, had some generally positive things to say recently. So ethics is where it's at. And will ethics ever be good enough for the Democrats vis-a-vis the president? No, they're going to continue to want to push it. But I'm very hopeful that we get something that's palatable. Because do you really want to be an individual who's heading into a very, very, very tight midterm race, and you're on the wrong, and you vote against something that sets Fair Shake and the crypto folks off? If you're Schumer right now, you've got one thing on your mind, and that's how do I get a majority? How do I wrest back control? And it all comes down to that electoral calculus. That's why if we get something to the floor, we get a vote on the books. That's where that electoral calculus comes into play. That's what I want to see. That's our best shot for succeeding. There were a couple of paths where we would have had a couple shots on goal. I think we're down to one.
Yeah.
I want to see it come to the floor.
So I'll say I agree on the one shot on goal framing. We're going to get one good chance at this, and that's really all we're going to get given the timing. That's certainly true. I think you're right that ethics is where the rubber meets the road. I want to be clear and say the following. I think the BRCA, there's a place to get to yes from the Democrats on a bill that is actually good. I think as they've gotten more up to speed on it, they've realized some of the lines they were being fed were probably not totally accurate. if you look closely at things like Tornado Cash and the DOJ and FinCEN literally disagreeing with each other, we do need clarity on how these things work, pun not intended. So I think that's solvable. I think on the yield compromise, if I'm being honest, the big banks have alienated so many people now, they've just moved on. Like, that's over.
Dude, they haven't moved on. They want clarity. They want clarity badly.
Well, now they want clarity because they've realized if they don't get it, they're stuck with Genius, which is even more permissive than what they were negotiating.
More than that, though, Austin. They want clarity because of federal preemption. They do not operate well in state-regulated things.
See Illinois slapping a transfer tax that doesn't work on crypto, right?
They want federal preemption. They're gonna press the throttle down. We get this bill, you're gonna see banks come in. We get this bill, you're gonna see Basel start looking better. And then once we have bank liquidity, it's a brand new world for crypto.
And to the electoral math, I actually think one of the things that could be helping the bill that people have not thought about is how badly the Democrats seem to be doing picking functional candidates in Maine and Michigan. By which I mean, if the Republicans are looking at it and being like, we like the territory, we're going to play offense, not defense, they may force a vote for that exact reason. I think the key to getting it through is going to be, can we get an ethics provision that is stiff enough that the administration probably doesn't like it, that the Democrats will vote for, but is not so stiff that somebody is going to throw their body in front of it to stop it. There is some sort of pivot point there. And to me, Chris, you tell me if you disagree, I think that efficient balance is probably forcing the Trump family out of their crypto endeavors, but without punishing them for things they did before the ethics guardrails were in place.
I haven't seen the text. I know blind trust will have something to do with it.
Yep.
You know, you hate to have individuals specifically targeted for any political reason whatsoever. It needs to apply to both sides. I hope they compromise. And then if we have something good on the ethics side, well, let's adopt it for every other market because we have equal problems there.
I was going to say that may be the other playback from the Democrats that I do think would be helpful is, you know, if Congress people can't run individual like crypto projects, why are they trading individual stocks? All right.
Yes, sir.
So on that note, we will know in a couple of weeks whether clarity is going to move or not. But for this week, today, we are out of time. So thank you, as always, for joining us for Bits and Bips. One last reminder before you go, Bits and Bips has its own channels now. The old feed won't carry these episodes anymore. Subscribe so you don't miss a single one. Now, thank you for joining us. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone. Thank you for watching and hope you enjoyed this episode of Bits and Bips. Just remember, nothing we say here is investment advice, and please check unchainedcrypto.com/bitsandbips for more disclosures.